Alrighty team, well, good evening, good afternoon, wherever you are. It is Wednesday. We made it halfway through the week already. We are here in Chinatown once again. Well, pretty close to Chinatown. We are starting off at the WeWork office here at Canal Street. We are going to be headed uptown towards 34th Street Penn Station. And there's a lot to talk about today. A lot of news, a lot of breaking news on Wall Street. One of the things I really wanted to touch on today is some news we have out of Micron Technologies, ticker symbol MU. So we've been talking a lot about the semiconductor space, the semiconductor industry, a lot on this particular stream, and they have announced that they will invest up to $100 billion to build a semiconductor fabrication facility in upstate New York, in a little town called Clay, New York. Now, Clay, I think, is about 15 miles away from Syracuse. So it is fantastic that we are seeing that type of investment, because a lot of the economic activity actually does not happen in upstate New York, right? The vast majority of the economic activity in New York State happens downstate. You can think about the 5 boroughs in New York City, Nassau, Suffolk County. So I think that's going to be an interesting topic to talk about. Also, a couple other businesses, big businesses, are coming out here and announcing hiring freezes. Amazon announced one. We'll talk about what that means. We're also going to talk about the housing market a little bit. We've been seeing some news coming out of the single-family home builders here. Now that there's retail buyers like you and me has gone down substantially. So what we see now is a lot of builders sitting on either finished homes that they can't sell or homes that are not yet completed. So we're going to talk about some things that they could potentially do to move that inventory, and that is where the big institutional investors on Wall Street come into play. All right, so I will put away my laptop here, team, and we will get a move on. Hope everybody had a good middle of the week. Let's see who we have in the chat today. I see my good friend Buy the Book. I see Paul Greenwell, Santa Monica Rodriguez, Savi Fredex, Rafed is here, says evening. Minraj, good to see you, Minraj. See Big Task. Roy S, welcome everybody. Welcome to the WeWork office here. I'll try to give you guys a live look out the window. Let's see what's going on out there. Not too much, looks pretty dead. Hey, Geo SFG is here, says, hey Tom. Geo, long time no see, man. I trust you are well. We got a lot to talk about today, but let me just get outside. Hopefully the internet doesn't go all wonky on us. Yeah, I'm seeing a lot of comments here about the Twitter deal. You know, I haven't really been following the Twitter deal, haven't really been keeping on tabs in it as much as I should. I've actually sort of muted a lot of the talk about that particular deal, but it looks like Elon Musk is going to be moving forward under the originally agreed upon terms. We'll continue this conversation once we get down here. And billionaire investor Carl Icahn that we talk about all the time on the stream, I think he made $250 million on a really, really good trade. So we'll discuss it. It's really interesting. I see Jay says, good evening, Tom. Hope you had a great day. Thank you, Jay. Joe says, where are you tonight? Are you in New York? Yeah, so we're back in New York. I landed JFK yesterday, so I'm back in the city. The usual suspect says, I like the Miami WeWork better. Yeah, well, I mean, there's many different WeWork locations that you could work out of. This is just a particular location that I tend to really enjoy. Well, let me, we have these safety buzzers here, so you have to push to exit. Is that a chill? So we are now on Broadway and Canal Street. It's going to be a little bit of a windy night, so I do apologize if there is any wind noise in the microphone. I have to get my mic up and running. But yeah, we'll continue the stream. We're going to be walking uptown towards Pennsylvania Station, Penn Station. But if you see in the distance, this one's for FredEx. All the way in the distance, that little bright white light, that's actually the Chrysler building. And I think this is a Ferrari right out here. Hey, photos from around New York, says Tom. I walked 10 miles today. Love that. Got to get the road work in. Pound out the miles. Love that. Sally is here, says, hey, Tom. Roy S., our good moderator, Marcy, says, hope everybody is doing well. Thank you, Marcy. Dan Zhang says, your Miami WeWork office seems a little bit more chill. Yeah, I mean, I definitely like the one in the Brickell City Center. Sonia C says, I've become downtown girl myself. Good to see you, Sonia C. Welcome, welcome. Let's see if I missed anybody in the chat. I see Deja Vu says, welcome, good evening. Destructionist is here. My friend Western Mass, Dave. So I'm seeing a lot of comments about the Elon Musk Twitter deal. So I'll briefly touch on it. Now, as I told you guys last night, I haven't really been paying attention to it because there was just so much back and forth on social media, on Twitter about, you know, is this deal going to go through, or is Elon Musk going to take this to court, in which case he'll have to give his speech at the stand. But it seems like he wants to avoid all of that, and he is going to go through under the originally agreed upon terms, or I should say the originally proposed terms of that deal. So billionaire investor Carl Icahn, and we talk about Carl Icahn all the time. He's very notable investor, and I used to enjoy his antics going back and forth with Bill Ackman on CNBC. But Carl Icahn built a sizable stake in Twitter, and essentially what his bet was is that he did not believe that Elon Musk was actually going to win his lawsuit, and that he would have to just succumb to doing the deal on originally agreed upon terms. And it looked like Carl Icahn was right, because he accumulated a pretty sizable position in Twitter. And I believe, as of recording this video, Twitter is not all the way back up to where the stock was trading at when Elon Musk proposed to buy it. But it moved 20% in 2 days. And I think the average price where he accumulated shares was roughly in the 30s. So I think he made $250 million for his investors off of that trade. So really, really, really amazing trade there by Carl Icahn to predict that Elon Musk was going to lose this battle. But my opinion on Twitter, you guys know, I think it's probably the best social media platform out there. I think, Facebook is very toxic. I think a lot of the other ones don't give the users as much value, I think, as they deserve. So, look, I think if Elon Musk can solve the spam bots and all these crypto scam bots on the platform, I think it's going to be really good, and I think the platform's going to be increasingly better. Dan Zhang says, Tom, I was wondering since when did New York streets get so dirty? Then I've realized it's just I've got used to your Miami streams. Yeah, so Dan, I'll tell you a quick story. Yeah, Task enhances Herbalife. That was some great antics there back in the day. So I'll tell you guys a quick story about the dirty streets in New York City. I think I told this multiple times before on the live streams. But my brother used to come and visit me in New York when he moved out. He moved to Boston. And every time he would visit, he would tell me, he's like, Tom, this place smells horrible. He's like, I don't understand how you stand it. And I'd be like, dude, what are you talking about? It doesn't smell at all. And I never, ever noticed that the city smelled ever. Fast forward a couple of years when I bought a place in Miami and I've been spending a lot of time there. The first time that I spent, I would say over 3 weeks, I would say about a month in Miami, and then I came back to New York City, I started to notice that it actually kind of does smell bad. And I think it's just because, if you live in the city for so long, you kind of just get used to the smell, which was kind of frightening. So now I will be fair, it doesn't smell egregious everywhere in the city, but some particular streets, it really smells bad. And ever since I made the move, or spend some of my time in Miami, I'm sort of noticing it now. So anyway, hey, Monique is here. Good to see you, Monique. Thank you for joining. I see RJ says, hey, Tom. You should only know how it smelled back in the 70s. Yeah, I could only imagine. Felipe's here. Michelle McGraw. Hey, Michelle. Good to see you. Thank you for joining. Sunshine After Rain. Destructionists. Welcome. Vonda Howard. Austin City Limits. Good to see everybody. Joni Q. I think I got everybody. Cool. So we're going to make a quick lap through Chinatown here, and then we are going to head back uptown. But we'll quickly do a recap of some of the market action today. Now, it was a whipsaw day if anybody was focusing on the intraday market action. We went from the S&P 500 being down like over 1.5% to being positive to being negative again, and then pretty much closing flat. So the S&P 500 closed at 3,783. The Dow Jones Industrial Average closed down at 30,273, and the NASDAQ Composite closing at 11,148. So all the major equity indices closing lower on the day. However, nothing material, pretty much flat. Now, there was extreme intraday volatility, but one of the things that I'm most concerned about, and we essentially voice this almost every single day on the streams, is just these very, very uncharacteristic movements in the bond market. So if we look at what happened in the bond market today, most notably that 10-year US Treasury yield, the 10-year yield was up 3.5% today, closing at about 3.755%. And obviously, if we know how the bond market works, when yields are up, bond prices, oh, look at that Tesla. Speaking of Elon Musk, But when we have an uncontrolled sell-off in the bond market, when people are dumping bonds, yields start to spike. I'll take you guys down Chinatown so you can see all the paper lanterns. Now, unfortunately, a lot of these aren't lit up. I'm not sure why, but maybe as we head down here, we'll see a lot more lit up. But it seems like we've been having ever since Monday, we've been having some pretty persistent buying in the bond market, sort of stabilizing the debt market. But today, yields were up again. Right here to your right, this place, 456. The exact address is 69 Mott Street. It's one of my favorite Chinese restaurants. I actually went here again today. Usually the first couple days when I'm back in New York, I always hit my favorite spots, especially if I'm working down here at the WeWork. I'll give you guys a... Right here, this is my favorite restaurant in Chinatown. 456, 69 Mott Street. Hey, Sweet Country Living in Michigan is here. Welcome, welcome. Mike C says all the excitement is in the bond market these days. Yeah, and I think that something that's very concerning to me is this is very, I would say, reminiscent of an illiquid markets, right? These extreme movements, like the extreme volatility, tends to be more relevant and happen often in bear markets, because during times of economic uncertainty, people are very, very hesitant to take on risk. We got the lanterns are back up on this block. Maybe there's like a power outage or something. I'll show you guys the contrast. So as you cross Bayard Street, you'll see all of the paper lanterns lit up. It's one of my favorite blocks in the city. But it looks like some are out, unfortunately. Hey, Albany County Sheriff Live says, hey, Tom, do you know how to get rid of? I don't. Mike C says, I think I'll have to visit New York City twice. Needed Tom's recommendations. Definitely do it, my friend. You got to do it. Hey, ABX Girl is here. Good to see you, the ABX Girl. Trust you're well. Thank you for joining here. All right, since we're in Chinatown, I'm going to stop by my other favorite spot. Give you guys 2 recommendations in one stream. We'll knock them both out. But the dollar, did anybody notice what happened in the Dixie today? The Dixie's sitting at 111, but if we notice, yes, we've had this sort of correction in the dollar, which I think has fueled this bear market rally. But if you notice, it's coming down right on its 50-day moving average. So I was reading a couple articles, more like opinionated pieces on Seeking Alpha. Sometimes I like to scroll through different analysts and things like that on Seeking Alpha, see what the different opinions are. And many people think that this is the start of a much larger trend of an actual weakening dollar. I'm not so sure if that's the case. You know, during bull markets in any particular asset class, things just don't go up in a straight line. You know, you go up, you correct, you find a floor, and then you go higher. So if you have tradingview.com or something like that, I would pull up a chart of the Dixie, the DXY, and throw a 50-day moving average and a 200-day moving average on there. And what you'll see is that this move that we had in the dollar was almost pretty much parabolic, completely straight up. So a correction here, I think, is pretty normal. So I think if we retrace to the 50-day, I think the dollar has some more legs in it. Could be wrong, but that's just sort of my view. So I was reading an interesting opinion piece on Seeking Alpha, and I always try to read some sort of opinion pieces that differ with my consensus. Just because anytime I build a thesis, I try to like to rip it apart. But quick pause on that. Great New York Noodle Town. This place is absolutely fantastic. If you are visiting New York City for the first time and you do come to Chinatown, this place is probably a must come to, and it is very, very affordable. Very affordable. Now, this was actually closed. I'm not sure if you guys remember during the summer live streams through June, July, and August. This particular location was actually closed for renovations, so I'm not sure if it's still cash only. It usually is cash only here, but it looks great on the inside, so maybe they upgraded their payment processes and things like that. Photos from around New York says I went about 2 weeks ago, and I completely agree. Love that. Hey, Michael, thank you so much for joining and supporting the chat. I appreciate you very much. Thank you, Michael. Andreas A says, why did the United States bomb Nord Stream 2? We're going to talk about that in a second. We got a lot to talk about tonight. It's going to be an action-packed stream. So anyway, let me just go. I want to just tell you guys one thing before I forget. So I was reading this Seeking Alpha article, and one of the particular analysts, and again, I'll post all of the articles that we reference during the streams. I usually post them in the Discord after, just so you guys could reference them as well. But this was a particular analyst making a thesis on the dollar top. I think that was actually the headline of the article. It says the dollar has topped. I don't agree, but I think it was he made some interesting points. So let's discuss the main point that he made. He's like, due to the events that happened with the Bank of England, and we talked about these events almost ad nauseum, right? With the Bank of England forced to step in here and provide quantitative easing. Although, to be fair, the Bank of England came out and said, oh, this isn't quantitative easing. We're just providing market stability. But, I mean, whatever you want to call it, it's quantitative easing. They're continuing their bond buying again to stabilize the debt markets. So his thesis is that Fed Chair Jerome Powell and the Federal Reserve, they do not want to avert from quantitative tightening, but he thinks that they'll be forced to. He thinks that there could potentially be a situation in the United States that mimics the exact situation that happened in the UK, in which case the Bank of England was forced to force their hand and revert back to quantitative easing and begin buying bonds, or gilts as they're called over there. And one of the main reasons why they had to do that is because you had almost a contagion effect happen and almost like a financial meltdown, because a lot of the pension funds that had a lot of derivative exposure to these treasuries, in which case the bond yields were spiking uncontrollably. And we always talk about, ooh, FredEx, first route of the stream. First route of the stream, right there. So one of the things we always talk about on the stream is that I always say, if you want to know where the stock market's going to go, you got to watch the debt market or the bond market. And my greatest fear is that we will sort of know when everything is over, and when this is the big one, when you have an uncontrolled sell-off in the debt market, you're going to see yields spike here massively. And that's sort of what you saw over there. And the Bank of England was forced to come in here and start buying bonds to stabilize the debt market and stop that contagion effect, that massive sell-off. Because when those pension funds had all of that derivative exposure, you started to get margin calls. And how do you meet your margin calls? Well, you have to sell assets. So as you sell the assets, it's just one after another, causing like a cascade effect, right? So his specific thesis was that he thinks that this same exact thing that happened is going to happen in the United States. And that Fed Chair Jerome Powell will have to inadvertently pivot. Maybe they don't want to. We did hear from another Fed president today that said, sort of reinforcing the belief that we are not going to pivot on monetary policy. We are going to continue to tighten, and we are going to continue to allow our balance sheet to shrink. So the author of the Seeking Alpha article, in conclusion, he says that's all well and good. He believes that the Federal Reserve wants to do that, but he believes that they won't be able to, because we're going to have a similar situation that they had in the UK, in which case, if the Federal Reserve is no longer raising interest rates, that's not going to put that upward pressure on the dollar. Because one of the main reasons why the dollar has been going up is because the Fed has been raising interest rates, which has been making US dollar debt more attractive, in which case other emerging market currencies has been cratering relative to the US dollar, so on and so forth. So I just wanted to point out that particular article. Now, I disagree with it, but I think he makes some very good points. But the reason why I disagree with it is because I think the reason why that scenario isn't going to happen in the US is because we do have a strong currency, right? We are still the world's reserve currency. Many commodities are priced in US dollars. So I think just based upon just the overall strength of the dollar and our reserve currency status, I don't think that that particular situation will happen, but it could. And this is very reminiscent and very familiar of the Barron's article. We talked about that many market strategists that specialize in the debt market or the bond market thinks that the Fed will continue to tighten up to which point the 10-year US Treasury yield hits 4.5%. And due to their analysis, they believe that once the 10-year US Treasury hits 4.5%, that's when we could have some major problems here in the United States. And again, I linked that article already in the Discord. Hey, I see DWG is here. What's up? Andy is here from South Korea. Good to see you, Andy. Welcome. Good to see you. I see Sally says, hey, Mighty Bull is here. What's up, the Mighty Bull? So still watching, listening, and learning, Tom. Good to see you, the Mighty Bull, as always. Appreciate you. Lex S says, Bloomberg is the default channel on my TV since I only have Samsung free channels. So are you talking about like on your smart TV, Lex? You know, I do have a Roku TV, but I really hardly ever use it. Hey, Walter King is here. This is always working hard. Good to see you, Walter. Hopefully your day has gone fantastic. Julia M is here. Welcome. Lex S is New York City, Chinatown bigger than London? Ooh, I don't know. I can't answer that. I've never been to London. But if I had to guess, I'd say no. I'm actually not sure. Supposedly, I think somebody in the chat told us that the Chinatown in San Francisco may be bigger than the one in New York. Or is that in LA? I'm not too sure. I don't know. I've never been to California. Mike Cease is watching Tom on my Roku TV as we speak. Thank you, Mike. Stefan D says YouTube Premium is fantastic. Yeah, so YouTube Premium, you won't have to deal with any of the advertisements. Is that correct? So speaking of YouTube, and I think this will relate well with the financial markets because Google has been getting clocked. And one of the major complaints that I've been seeing, you know, as I've been scrolling around on financial Twitter, is that it seems like YouTube, Alphabet, you know, parent company Google, it seems like they're making this big push for people to sign up for the YouTube Premium subscription, that oftentimes when you watch an advertisement on the platform before a free video, they're starting to add like 5 or 6 ads that are not skippable. And that's creating a very poor user experience. So I guess there's a quick poll in the chat. When you guys click on this video, assuming you don't have YouTube Premium, is that what YouTube is doing now? Are they stacking like 3 to 4 back-to-back non-skippable advertisements? And if not, or if so, have you guys been noticing that same trend? Because I've been seeing quite a few posts on Twitter saying, you know, it seems like YouTube is getting quite desperate, maybe for increased advertising dollars. So they're stacking ridiculous amounts of non-skippable ads on top of one another. Okay, Marcy says it's only 2 ads for me still. Zabatata says yes, 1 or 2. Running at altitude says yes, Tom, they are starting to stack advertisements. Okay, so it seems pretty normal actually. Maybe it was just wow, someone says 2 ads back to back on this channel. Interesting. Very interesting. So let's cross Canal Street here as we make our push uptown. Maybe I'll make a left and we'll cut through Little Italy. Another thing I wanted to point out is anybody noticing this action in the VIX? Okay, so the VIX, the CBOE volatility index, fell about 1.72% today. I think it closed at 28. Now, if we remember where the VIX was last week, and I think I posted a screen snap or a screenshot on Twitter, that last week the VIX started to get a move on here. And one of the things that we wanted to look for to potentially identify some sort of a market bottom is a massive blow off in that VIX. So I think on September 28th, so last week, right? Yeah, September 28th was last week. The VIX hit a high of, I think, 34.60 or 35. Now, historically, that is elevated, but it's not the readings that we really want to see, like what we saw during like the COVID crash, like we saw during 2018, stock market sell-off, when the market actually bottomed on Christmas Eve, by the way. But it did get up there. And so now we've collapsed all the way down to about 28.56. And I think that's why you're seeing this little bit of a bear market rally in equities. So the last thing I'll say in relation to that is because here's how I have my trading view set up. The first couple tickers I have is the chart of the 10-year US Treasury yield, okay? You could put a chart up of the bond or the yield, but they have an inverse correlation, doesn't matter. Then I look at the Dixie, then I have the VIX, and then I have crude oil, okay? So quickly piggybacking to crude, because we have a lot to talk about today. I think we have already seen a relative bottom here in crude oil. And I think we could maybe push a little bit higher. However, notice where crude oil is trading at right now. So you could either pull up light crude futures, which is ticker symbol CL. We rallied to about $88 a barrel. But we are literally right up against the 50-day moving average right now. So we were about, and I think I also posted this chart on Twitter, we were about 10 to 12% extended to the downside on crude. And now it seems as we have rallied right back to the 50 days. So that begs the question, are we now going to turn around and roll back over? Or do we have extra added legs or added fuel, no pun intended, in this rally in crude? Now, let's give an argument. I think we should give an argument both ways, just so we don't fall into a potential confirmation bias or something like that. Now, OPEC Plus today announced oil production cuts by 2 million barrels a day as they essentially completely ignore President Joe Biden's pleas to increase production in order to, get gas prices down for the American consumers. All right, I give this outdoor dining setup 10 out of 10. I'll turn around and give you so you guys can see the entire outdoor setup. See, these outdoor dining setups, I think they should be allowed to stay because these are beautiful. They did a great job with these. And if you notice up top, check out these things hanging up from the top here. These are heaters. So when it gets cold in New York, you could still eat outside. I mean, it's going to be a little cold, but it's not going to be that bad. This one's really nice. Yeah, Western Mass Dave's oil cuts. I saw that today. Yeah, so the Saudis, and did anybody see that clip on Twitter? I forget, I may have retweeted it. I forget who posted it. But there was a reporter from Reuters, and he wanted to ask one of the Saudis a question, right, at the OPEC meeting. And he refused to answer the question. He's just like laughing the guy off. And to me, and again, I'm trying not to get political, but to me, it just seems like there's no sort of respect of President Biden's request for increased oil production. Now we're going to go ahead with a cut of roughly 2 million barrels a day. So could this rally in crude have legs? Potentially, but I think we're at an interesting technical level here. Again, if you have tradingview.com, it's a free trading software. just pop a 50-day moving average, and the 50-day is in a steep decline. You're seeing that 50-day come over like a tidal wave, and it's right at that $88 key level. Now that is for ticker symbol CL for light sweet crude, but the vast majority of people look at Brent crude, which I think Brent is at, I think $93 a barrel, I think, trading at roughly. Hey Robert, good to see you. All right, guys, really quick. This is a very, very famous Italian bakery here in Little Italy, Ferrara. And if you actually keep walking down Grand Street, you run into a little bit of a soccer field. I used to play soccer there when I was in college. There's some great pickup games down there. But for those of you who haven't been here, this is a great Italian bakery right here. Hey Latha, this is Tom. Gas prices here in LA are almost $8 a gallon. Oh my God. That's insane, $8? So Latha, when we were back in Miami, Florida, what did I say I saw it at? I think I saw gas at $3.99. So obviously not as egregious as California prices, but man. Monique says Carmine's. Yeah, Carmine's is a good spot. So the Carmine's that I usually go to is on the Upper West Side of Manhattan. But Monique, I'll give you a recommendation better than Carmine's. And it is called Becco, B-E-C-C-O. It's in the Restaurant Row district, right there to the left of Times Square. It's fantastic. You gotta go. Oh, 305 Travels and more, says Tom. It's $2.98 in Miami, Florida right now for the gas. Julius says, all I know is gas went up about 30 cents in the last 24 hours. Charles D says that's extreme. Yeah, $8 seems ridiculous, but then again, I'm not in California. So yeah, I just wanted to mention that maybe this rally in crude oil has legs off the back of the news out of OPEC that they are going to cut about 2 million barrels a day, as they seem to ignore the Biden administration's pleads, I should say, of increased production. So much for the energy independence. Dan Zhang says, my friend was trying to piss me off today by purposely sending me a pic of her spending $9 to charge up her Tesla. Ooh, that's all it costs? It's $9 for a full charge on a Tesla? I never do that. It sounds like a smoking deal. Hey, Sandra Nunez says, hey Tom, hey Sandra. Good to see you. Dusty Cole says, Tom Carmine's reminds me of The Sopranos. Funny. So Lex S says, so is Biden releasing more strategic reserves now? So he is. And so here's my concern about that. This is also, I'd give this outdoor dining setup maybe like a 7.2, 7.1 maybe. Looks unique. No outdoor heaters though, so it gets a 7.2. But these ones are nice, the other ones are no good. So here's my concern. And again, I'm gonna try not to be political. Oh, by the way, we're actually, I know I've been maybe, I wouldn't say talking negative of the Biden administration as it relates to this OPEC cut. I just think that a lot of the OPEC nations don't respect the Biden administration. But I'm actually about to do a segment on the stream where I commend and give the Biden administration 2 thumbs up. So stick around for that. But I think our strategic petroleum reserves are near an all-time record low. And there's a lot of speculation that the administration is releasing or using a lot of our strategic reserves going into the midterms. Because if we have gasoline prices spiking and going gangbusters, that's not going to look too good for the administration. Hey, JC Trade is here. Good to see you, JC Trade. I wanted to touch on, before I forget here, We actually have some very positive news. This is actually some very, very good news here. But before we get to the good news, I'm actually going to walk down here. I want to show you guys one of my favorite Egyptian restaurants. Anybody a big fan of Egyptian food? It's coming up right here on the left. It's fantastic. The place is called Zuba. But breaking news today, here's another Tesla out of the Wall Street Journal. So a major semiconductor company, Micron Technologies, which trades under the ticker symbol MU, has announced they're going to invest up to $100 billion in order to build a semiconductor manufacturing campus in upstate New York. So for those of you who are not from New York, I think I want to preface this with saying New York is a very, very big state. Okay, and oftentimes, you know, as I'm about my travels, people will say, where are you from? I say New York, and everybody always thinks New York City or Long Island. But New York is a massive, massive state, extremely, extremely big. And the vast majority of economic activity that comes out of New York is mainly based in the metropolitan area of New York City. So you could think about Manhattan, the Bronx, Brooklyn, Queens, Staten Island, going further out to Nassau and Suffolk County on Long Island. But very seldom do people think of upstate New York. And when I think about upstate New York, central New York, you could think of a place like Syracuse, Cayuga County, Rochester, New York. And that particular location of New York has historically been quite economically depressed as it relates or as it compares to downstate. So there's a town called Clay, C-L-A-Y, New York, which I believe is about 15 minutes just north of Syracuse. So you could think of the big university right there on the hill. So I think this is going to bring a ton of jobs to upstate New York. So this is actually some very, very good news. However, I think it's going to be good news in the short term. And I'm trying to figure out the best way to word this, because I don't want to say it's going to be negative news or bad news in the long term. But what I mean by that is there's a couple things at play here. And we've been talking about this for quite some time on the live streams. Well, the number one thing is that over, I would say, the last decade, a lot of the manufacturing capacity as it relates to semiconductors has migrated away from the United States, overseas. So does anybody want to take a guess? And I think this will be a fun trivia question as we go down this topic. Does anybody want to take a guess at what percentage of the chip manufacturing capacity is based in the United States? So out of the American factories, what percentage of the world's chip capacity is based here in the United States? Does anyone want to take a stab at it? Oh, 3T3. It says, hey Tom, I grew up in Liverpool, area of Syracuse. Go to Heidi's Hot Dogs if you ever go. I'll take a screenshot of that and I will go. Thank you for the recommendation. Okay, 40%. Joe says I would say about 5%. 3% says Latha. Nonstop Travel says 17%. R2D2 says 2%. All right, so we're all over the board here, but some of you are getting pretty close. I think Marcy, you almost absolutely hit the nail on the head, but it's only about 12%. So Marcy, I think, was the closest at 11%. But as it states right now, we're at about 12%. And if I was an advisor to the Biden administration, I have sort of reviewed this multiple times on other streams, but I think it's good to review it now. I would say that that number is completely and totally unacceptable. And this isn't the Biden administration's fault, by the way. This has been happening way before the Biden administration took office, but this is an absolute national security threat. And now many of you may be like, no, that's an over-exaggeration. You know, it doesn't matter. But no. That is an absolute national security crisis, that the United States doesn't control the land grab of the semiconductor manufacturing infrastructure. Now, I know some people are going to disagree with that, and that's fine. But in my experience, if you look at the broader trend, okay, I want everybody to stop and think of all of the new innovative technologies that are going to be brought about and even in production right now over the next 10 years. Okay, so let's review some of those right now. And I think you'll start to notice a theme here. We talk about electronic vehicles. In the average EV, there's about 2,000 to 3,000 chips or semiconductors in one EV. You talk about autonomous driving, artificial intelligence, machine learning, cloud computing, smartphones, maybe smart home appliances, things like that. And I could go on and on forever. So pretty much everything of importance is going to run and operate solely on semiconductor infrastructure. You're going to need chips. The chipsets will be the new oil. It will be the new oil boom. So if the United States doesn't control that manufacturing capacity, do you think we're going to fall behind in the world, or do you think we're going to get ahead? I think the answer is pretty obvious. I think we would fall behind. So now on to I try to be as fair as I can. I actually think the Biden administration did a fantastic job with this CHIPS and Science Act. I think it was a fantastic thing to do. I give them 2 thumbs up. Now, many of you would probably say, oh, but Tom, that's more government spending and more subsidy for these companies that don't need it. To which I would say, that's true, you're right. However, the money is going to be spent anyway, and I think people need to come to terms with that. The money is going to be spent anyway. These politicians, governments are going to spend money on ridiculous things. So instead of spending money on funneling it around the world and drone strikes and funding foreign wars, I would rather give the subsidy to the top of the line tech companies, specifically in the semiconductor space, to help develop manufacturing capacity and capabilities here in the United States. So now I want to talk about one of the potential headwinds here. Because as we know, I'm assuming many of you are thinking this as well, you're like, well, why would a semiconductor company ever in a million years start to build out manufacturing capacity and facilities and fabricators here in the United States when they could do it abroad and get labor for pennies on the dollar? And you're 100% right. And that is why, whether we like it or not, we needed to pass this CHIPS and Science Act. So I actually want to read a little bit of an excerpt here of what the CEO of Micron Technologies said about this exact topic, because we've been reviewing this a lot. So I think it's important to understand that particular market mechanic here. So this is what he says in relation to the cost of labor, so to speak. And this is one of the reasons why we need those subsidies. And just to give you guys a quick update on where we are crossing Houston Street, East Houston. So we are leaving Soho, headed into the NoHo neighborhood of New York City, in which case we will be near New York University, NYU, here in a little bit. Hey, CeeLo Tilos says, hello, Tom, good evening, welcome. Roberts is $1.15 trillion in 1.15 trillion semiconductors were sold in 2021. Yeah, it's a booming industry for sure. So here is what the CEO of Micron Technologies said in a statement as he announced the up to $100 billion investment. And he says, and I quote, he says, we will need support from the federal government as well as support from state governments to bridge the 35 to 45% cost gap that exists in overseas production. Think about that. The 35 to 45% cost gap that exists in overseas production. So you guys are 100% right. You're spot on. The cost of labor, you can't even compare it. So I think there's going to be a lot of job creation from this particular investment, as you see a lot of these semiconductor companies investing into new facilities. But I think over the long term, as they realize that all of the labor costs in the United States are so high, what is the one thing I always say when we are trying to identify an emerging trend? I always say, follow the money. So I think a lot of that money is going to be invested into automating a lot of these monotonous tasks of these factory workers at these chip plants. So I think in the short term, you're going to see a lot of job creation of, basic factory workers. But I think over the long term, a lot of those jobs may be automated away. However, it's not all gloom and doom, because for every manufacturing job that I think is going to be destroyed by artificial intelligence and robotics, there's going to probably be 2 or 3 additional new jobs that are created. However, here's the catch. Those new jobs will require a completely different set of skills that a lot of the American workers just don't have right now. So here's step 2. So if I was consulting with the Biden administration, I would say, okay, the CHIPS and Science Act was fantastic. I support it. I think you guys did a great job. But here's step 2. There needs to be a step 2. And I'd like to present that now. I think it's important. And step 2 is to retrain and retool the American workforce for a new economy, right? You're going to need engineers to program these robots. You're going to need engineers to build these algorithms. And the average manufacturing worker in the United States doesn't possess those specific skills. So I think part 2 of this bill needs to be investing billions of dollars into retooling and retraining our workforce for a new and modern economy. So we'll take a little break from talking about semiconductors to a more important topic, which is coffee. So this is Gasoline Alley Coffee right here, which is one of my favorite coffee shops in the entire New York City. If you are new to New York, or if you're not, highly recommend this place. Give it like a 9.7 out of 10. It's fantastic. Hey, Jerry, good to see you, my friend. Jerry says, okay, it's time to train Joe's six-pack how to train machine learning models. Hey, Patrick, New York is here. What's up, Patrick? Good to see you. Thank you for joining tonight. Lex S says, I wonder if the markets are getting ready for a potential 8 years of DeSantis in office. I'm not sure. Hey, Gregory is here. Welcome, Gregory. Thank you for joining. Hey, Eyeglass Lady says, makes me wonder why the manufacturing will go in another state, or why the manufacturing will go in another state. Poon Adam is here, says hello, welcome, good to see you. Hey, Nonstop Travel. Thank you for joining. Brevard County Real Estate is here. Good to see you, Brevard County Real Estate. So what are you guys' thoughts on that? In relation to semiconductor plants and fabricators being built in the United States. Lex S says, honestly, if we learned anything, then 2016 taught us that you can never make political predictions anymore. Hey, Walking Minnesota says, hey, Tom, I have my final interview for a SaaS job tomorrow. Suit or no suit? Definitely suit up. Walking Minnesota. Congratulations on that, by the way. That's awesome. So what department are you interviewing for? Is it for a sales position? Is it engineering? That's awesome, though. Congratulations on your success. That's fantastic. Love that. Eyeglass Lady says, Tom, Micron headquarters is in Boise, Idaho. Comment got away from me. Yeah, you're right. But what I think is happening now with this new CHIPS and Science Act is a lot of these particular, I would say, states are now going to compete for that talent. So it's whoever can offer the most subsidy, right? Whoever can offer the most tax incentives and tax credits to do so. And I think New York State threw the boat at it, which I think is good. As a New Yorker, I may be a little bit biased, but upstate New York really, really needs capital injections and a big company to sort of park their sails there. Because upstate New York is, in some parts, not all, tends to be more economically depressed than the downstate. So I think this is good news. This is a very, very good piece of news that happened. So to all of our friends in upstate New York, Syracuse, in Clay. So the actual facility is going to be in a town called Clay, C-L-A-Y, New York, which I believe is about 15 minutes north of Syracuse, I think. Hey, Ken Glass says, Tom, for some reason I love your New York walks the best. Thank you, Ken, for your support. Thank you for being here. I appreciate it. Dr. Longus says, Tom, we need to manufacture more of everything in the United States. Agreed. Mike says, to be fair, the designs of semiconductors in the US is way more than 12%. I think the manufacturing capacity is about around 12%. So I think American factories have only about 12% of the world's chip making capacity. But maybe if you think about design, there's some companies that solely just design the chipsets. Yeah, Dr. Longus says so many people are leaving upstate New York. A ton of people. I mean, if you look at the population charts, look at, go to Google Trends or something and look at the population of towns or cities in upstate New York. You could look at Rochester, Syracuse, Buffalo. All of them are in quite steep decline compared to a lot of other places. NYC Dub says, hey Tom, as a native New Yorker in Manhattan, West upstate New York is a tough sell to live full time. No offense, just saying. Oh yeah, absolutely, man. I mean, you don't have to tell me twice. That's why I got a place in Florida. I think it's all about personal preference, right? For me, I like it hot and humid all year round. Now, the downside of upstate New York is, and if I'm not mistaken, you guys could Google this yourselves, but I think upstate New York, places like Oneonta, Syracuse, Rochester, I think they get some of the highest snow totals in the entire United States. So if you want to live in a cold, dark, snowy place, it's definitely a tough sell to your point, man. Hey, Rich McNeilis says, hey Tom, hope all is well with you. Thank you, Rich. Thank you for joining tonight. Yeah, G-Shep says the machines that make semiconductor chips is very complex and takes many years to create. Taiwan is way ahead in that area. G-Shep, you're 100% spot on, and I think that's why the increased tensions between China and Taiwan is getting the United States on edge here. Because whoever controls and whoever dominates in artificial intelligence and machine learning, I think will dominate the remainder of the 21st century. And what is going to power a lot of those algorithms and a lot of this AI? It's the semiconductors, it's the chips. So I think you're 100% right, G-Shep. Hey, Barry Bell says, hey, where does the raw materials come from semiconductor manufacturing? From all over the world. But one of the concerns that I have, and I think we've voiced this before, as it relates to semiconductors, as it relates to EVs and battery technology, a lot of these raw materials for these EV batteries come from the Democratic Republic of the Congo, which is very, very known for their very harsh child labor and unethical practices. So I think as we're talking about, all of these big companies and all these big banks want to push this ESG narrative, the environmental social governance. Well, do you know that a lot of these rare earths are coming out of places where they use child labor and even slave labor. How come nobody talks about that? That's not very ESG. Charles D says Tom, Palantir will dominate AI. Charles, there was a good, there was a really, really good, what was it called? Interview with Stanley Druckenmiller and the CEO of Palantir. I think I dropped it in the chat. You're right. Dubs says, Tom, what are your thoughts on Meta's current stock price? I think it's one of the cheapest stocks on the street relative to the companies pursuing future. Yeah, I'm gonna stay away completely from Meta. You know, there's an old saying on Wall Street. Well, usually they say buy low, sell high, but the right way is actually buy high, sell higher, and sell low, sell lower if you're shorting. And just look at the gross damage on Meta's chart. Not only is it well below its 50-day and 200-day moving average, it's sliced below its 200-week moving average. So that is a significant amount of damage. And when a stock gets creamed like that, it has a ridiculous amount of overhead supply. So I don't know if I want to be buying something. And look, this is just my personal opinion. But I don't know if I would want to be buying something with such a ridiculous amount of overhead supply like that. But that's just my opinion. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami, and we would love to have you guys along for the ride. But team, friends from around the world, we are here at 51 Astor Place, which is the IBM Watson building. Now, I think IBM Watson sold off their healthcare unit to PwC or PricewaterhouseCoopers. And I've said this many times, I was actually interviewing for an enterprise account executive position selling IBM Watson in the healthcare vertical. Well, thank God I didn't get the job, because I probably would have been terminated after they sold off their unit to PwC. Hey Brian, what's up? Good to see you. Philip Richards is here. Hey Philip. Says, hey from Jamaica. Me and my brother Stefan, watching from Jamaica. Love your streams. Hey, thank you everybody joining from Jamaica. I wish we could have some of that Jamaica weather here in New York. But thank you for watching. And shout out to all of our viewers from the beautiful, beautiful country of Jamaica. Andy Zizzle says, should I buy Twitter stock? And damn, you almost got hit. I can't advise on whether you should buy or sell something, unfortunately. But the Twitter deal is going to close. And I guess we'll touch on the topic a little bit, but just so everybody knows, I can't advise to buy or sell anything. I'm not licensed to give out financial advice. So the stream is more to give the news about the general market, share our opinions. But if you want to, know something to buy or sell, you have to talk to like a registered financial advisor. I'm not that. So a little bit of merger arbitrage here. Everybody like that word, merger arbitrage? Nice Tesla. Carl Icahn showing his face again on Wall Street. Now, Carl Icahn made about $250 million allegedly on his Twitter trade. And essentially his thesis was that, we'll go this way. Essentially his thesis was that Elon Musk would not be successful in his litigation to, let's just say, negotiate on the price of purchasing Twitter, because Elon Musk alleged that Twitter did not fairly disclose, or they were lying about the amount of spam bots on the platform, which could negatively impact the valuation. But in essence, Carl Icahn's bet was that that litigation would not turn out in Elon Musk's favor, and that he would have to revert back to buying Twitter at the originally proposed valuation. And Carl Icahn nailed that trade to the wall, ripped its face off, and made about $250 million after he accumulated a massive position in Twitter, right around $30 a share, after CEO of Tesla, Elon Musk, announced that he would be going forward with the originally proposed deal. The stock went on a rocket ride, about 25% in 2 days, netting the iconic billionaire investor Carl Icahn $250 million profit. Talk about a beautifully played merger arbitrage trade by Carl Icahn. Blues Writer says, Tom, if you had $44 billion, would you buy Twitter? I definitely wouldn't. I probably wouldn't either. But Elon Musk is such a special person. I mean, you know, one of the things I'm most curious about, and let me know what you guys think. One of the things I'm most curious about as it relates to Elon Musk, how does he have the time to do all this stuff? Like, seriously, I don't understand how he finds the time to run Tesla, to run SpaceX, now to run Starlink, and then Twitter. I just don't understand how he does it. This is like a very, very high level person. This is like, I mean, people that like him don't exist. I just don't understand how he finds the time. Hey, Wendy is here. Long time no see. Wendy, thank you for joining tonight. Always a pleasure to see you. Thank you for being here. Zozo Bob is joining us. Welcome. John G. Thank you, John. Dan Zhang says, I feel like if you're investing in either Tesla or Twitter, you're not investing into the companies, you're investing into Elon Musk, the person. That's an interesting way to look at it. Sort of like betting on the entrepreneur. Hey, friend is here. Good to see you. Yeah, Monique is like, he must drink a lot of coffee. Rich says Musk 2028. Rich, I think I could get behind that. All right, team, are we allowed to talk about the housing market a little bit? Would you guys mind? I think we're covering a lot tonight. We talked about semiconductors, we talked about dollar strength, we talked about the movements in the bond market, some illiquidity problems. You know, I'll quickly touch on that one more time for the people who are just joining. My biggest concern about the bond market right now is the way the bond market is moving. The 10-year U.S. Treasury yield was up 3.5% today to 3.755%. So you're seeing this whiplash action in the debt market, which to me signals that there's no liquidity, right? Because when investors are very, very scared and fearful, they don't really put their money to work at risk. So anytime you have like a big order of something go through, that's really going to move the price one way or another, up and down. And obviously, when there's no liquidity, that you could potentially have big sell-offs in the debt market, spiking yields and crashing stocks. But in relation to that, according to Bankrate.com, as of today's close, the average 30-year fixed-rate mortgage is 6.83%. That's actually down about 3 basis points from a week ago. Now, if you remember on Monday, we actually hit a 7% average. So the average fixed rate on a 30-year mortgage was actually 7%. So what that means is if the average is 7%, some people are getting quoted below that, and some people are getting quoted above. So now that we've established that, I want to talk about single-family home builders, okay? I want to talk about single-family home builders because we have a lot of news coming out of the home builders. So knowing that interest rates, hold on one second. I'm just gonna let these people go by. So knowing that rates are up, essentially what this has done is it's completely dissolved the average retail buyer, or people like me and you, right, that are looking to buy our first single family home, our first investment property, whatever. A lot of these single family home builders have absolutely seen those buyers evaporate. So home buyers have actually opted out of the market. They said, you know what, we're not going to buy because we can't afford it. Prices are still elevated and the price of debt has skyrocketed. So could we have afforded that $600,000 home last year when yields were 3%? Yeah, we probably could have done it, right? And I'm using afford in air quotes here. I'm using afford in air quotes as it relates to the monthly payment. But now that rates have been on a rocket ride, they can no longer afford to buy it. So here's what some of the single family home builders are doing now. They're seeing their inventory pile up here. And even some of the homes that are not complete yet, their buyers are backing out of these contracts at all-time record highs. So this could actually be a very, very good bargain for Wall Street. And when I mean Wall Street, I mean big institutional property managers, property buyers, or big institutions that are in the business of buying single family homes for rentals. So hear me out on this. If you're a big single family home builder and you've seen a massive, massive uptick in customers backing out of contracts, or just people not even interested in buying a newly built home because rates are so high, well, in order to offload that inventory, you're probably going to look to cold call big institutional investors that specialize in renting single family homes to say, hey, demand is down. We have about 300 homes. We'll sell it to you in a big block transaction and we'll give it to you for 20% off, 15% off. So Wall Street wins, well, potentially, this is a theory. Wall Street may win here by saying, oh my gosh, we can get a 20% discount on a big block bulk order of homes. And many people may be saying, oh, well, it's very cumbersome and very monotonous to manage or property manage single family homes. Well, not if you have whole subdivisions. This is actually a pretty good Korean barbecue spot as well. But it's not actually as monotonous as you would think if these single family home builders are selling all of these single family homes in big block orders. Because much of the time when a single family home builder is going to build a home, they usually buy a huge plot of land and build an entire subdivision. So imagine if you can sell in a big bulk order of 50 homes, 60 homes to Wall Street on one big cul-de-sac. That's going to be the easiest thing to manage on earth. So this begs the question, as retail are finally saying, oh, rates are finally going up, maybe home prices will come down, there's going to be a huge glut of supply on the market, could this potentially make a big impact to say, oh, we thought all these homes were going to sit on the market. That's not happening. They're actually going to be sold to Wall Street and rented to me and you. Do you think that is enough, or this activity would be enough to make a substantial dent into keeping prices elevated? What do you guys think? Lex S says Nashville, Tennessee is cooling. Brevard County Real Estate says the big builders buy down the rate to do volume. Example, Horton can offer 5.5% using their in-house lender versus 6.9%. This is Brevard County Real Estate. Charles D says Fort Myers may never recover. Move away forever. Yeah, I mean, a lot of that, it's the same thing that happened in like Long Beach, Island Park during Hurricane Sandy. It was horrible, horrible, horrible. See, the storm surge is what's crushing. Blues Writer says housing market scares me, especially if Fed stops buying housing debt. Here, I'll give you guys a shot of some of the building facades here. Wendy England is here. Good to see you. Charles D says, when you say Wall Street, do you mean real estate investment trusts? It could be that, or there's very big like private equity or real estate funds that specialize in buying single family homes and renting them. So one of the thoughts that I had was, look, because there was an interesting statistic that came out, I think from the Wells Fargo Housing Index, as it relates to buyer foot traffic. I'm trying to look at my notes here. I wrote it down. Yeah, so this is sort of where the thesis builds, and I'll drop the article for you guys. It says September was the worst month for new construction buyer traffic since 2012, according to the National Home Builders Association / Wells Fargo Housing Market Index. So that means people walking the lot, foot traffic to new home builders who say, yeah, I'm interested in potentially buying a house or something like that. That's at an all-time record low, dating back to 2012. And 2012 was when we were in the midst of the financial crisis. I don't think home prices bottomed nationally until late 2012. So I think in order for home builders not to lose their shirts on this inventory, they could just sell it all in big block orders to Wall Street, and they could just rent it out to people, because I think rental demand will stay relatively high. But many people are potentially going to get upset about that, because what they'll say is, now there's no inventory on the market, interest rates are still high, and you're not letting prices correct, because you could have Wall Street or private equity that has huge tons of disposable capital able to buy up all these homes. Gregory says rent is so high. I think it's going to start to come down. It's already showing signs of coming down here a little bit. Hey, Clarence Jackson says Blackstone is a major player in the single family housing market. This is Clarence. Wow, everybody check this out. So this is the beautiful Empire State Building right here on East 21st Street and Broadway. Hey, Lemonade, good to see you. Lemonade says Fort Myers does look like it will never come back. I couldn't believe the aftermath. Yeah, it's essentially like everything is washed away. It's very reminiscent. Has anybody ever walked Long Beach, New York after Hurricane Sandy? Now, if anybody's been to Long Beach, it has a beautiful boardwalk. Well, that boardwalk was non-existent after Hurricane Sandy. It totally demolished the entire thing and pushed sand literally to the second story of some people's homes. It was horrible. And in many instances, if you go to Long Beach today, there are still homes that are being lifted. They literally have to lift these homes and put them on stilts. So I think you're right. I think it's going to take a very, very long time for people to rebuild after this Hurricane Ian. And I think what you're going to see is a lot of people just taking the insurance money or the FEMA money and just not going to build anymore, or not going to build back. Which I was reading an article in the Miami Herald, and they said this could be very, very bad for the culture of Fort Myers. Now, I've never been to Fort Myers, but supposedly what the article said in the Miami Herald is that Fort Myers sort of kept it as a very quaint, nice town. It's not like you're gonna see those big brand names like Bubba Gum Shrimp there and all this touristy stuff, because there was a lot of local small businesses and they did a good job of keeping that stuff out. But now what they fear is that many of the small mom and pops are not going to stay and build back, which could open a window for all of these big developers to sort of make it into like a Times Square-y type touristy thing, which is not good. So this is a fantastic view of the Empire. It is lit up in its bright crystal white tonight. We are at the southernmost tip of Madison Square Park, right next to the beautiful but scaffolding covered Flatiron building. I'll give you guys a quick view of it right here. Hey, Brevard County Real Estate, this is Tom. Fort Myers in Naples, Florida has the oldest population in Florida. Oh my God, I didn't know that. Yeah, so to your point, they could just move somewhere else. Ooh, looks like there's a bike crash. See, this is why I always tell you guys, you gotta be careful. How many times do I say that on the streams? You see these bikers and these cars go 1 trillion miles an hour. I hope this guy's all right. My God. You guys have seen me almost get hit by these bikers and these cars here. That's why even if it's a red light, you'll always see me looking both ways. You can't risk it. Oh my God, I really, really hope this guy's all right. And hopefully it wasn't a hit and run. I don't think it was. I think the guy stopped right here. Hey, Bit of Wanderers here. Good to see you, my friend. Penelope from Tennessee is here. It says, hey, Tom and everybody. Good to see you. I hope to God this guy's all right. Well, the good news is there seems to be a helmet, and helmets could save your life. If there's any bike, like see all these people on these bikes with no helmets? You know, I used to do that when I was in college, ride bikes and skateboards without helmets, but I've seen too much craziness in the city. It's not worth it, man. The helmet could save your life. I really, really hope he's all right. Julius is Tom. The same thing happened to the Maldives about 10 years ago, and they came back, and everyone's still traveling there. But most of the island was gone. Oh my God. Oh man, I think he was like a Postmates driver. Now for the New Yorkers here, you guys know these, I'm not gonna say all of them, but the Postmate drivers and little bikes, they go sometimes 25 miles an hour in the bike lane. Charles B says helmet should be mandatory. I mean, during my college days, I used to be naive and, you know, because no one wants to ride a bike with the helmet, but after I've seen way too much crazy things in this city with bike accidents, scooter accidents, that, you know, in full transparency, everybody, you know, I know a lot of you always ask me about when are we going to bring back the skateboarding streams. This is one of the reasons why I haven't really been on the board doing these streams, because it's just too much. And as the stream has grown, I don't think I could be able to read the chat, ride the skateboard, and do the financial talk. So the reason why I did it was because we were doing it during the pandemic when there was no traffic here on the streets. But now everything is back to normal traffic. I don't think so. I think the car is parked here. I think it was him. I just got here not too long ago, but
Where's the guy?
The delivery guys, they go way fast, man. You know,
I'm a delivery guy, bro.
you gotta slow down, bro.
Yo, bro,
Make sure you're
it's
safe.
not the delivery. Yo, bro, you talking to a delivery guy. It's not us saying gotta slow down. It's 25 per miles a limit. 15 with his pedestrians.
In the bike lane?
Yo, bro, anywhere in New York City, bro.
Oh yeah, for the cars. Yeah, you're right. Yeah.
Like,
A little slow, yeah.
There's no fucking 40 miles per hour out here. These cars be pushing that regularly.
Oh, for sure, the cars, yeah.
Yeah, of course. So you're saying bikes need to go slow. It's not an analogy that behind that needs to say that, because bikes only go up to 20 miles per hour, bro.
I know, but
also,
still,
a fucking bike can go is 35 miles per hour. It
No, I
doesn't
know,
make sense. If a car can naturally go faster than that, I mean, the fucking cars need to slow down.
Yeah, right.
That's like a person walking across the street. Just because he can run 15 miles per hour and he gets hit, it's his fault?
Right.
Makes no sense, bro.
All right, man. Have a good one. Mike Skate TV, good to see you. Emilio J. Tom can see the future. He tried to warn this guy before he got hit. All right, team, we will head up now towards 34th Street. But yeah, there's been many times when even I've been doing live streaming, just walking across the street. And number one, these cars will blow the red lights, or the delivery guys will be making these turns on their bikes at 25 miles an hour. It's just, I think it's better for everybody to slow down. And wear a helmet too. But here we are, standing right in front of the beautiful Flatiron building. Unfortunately, it's still covered in scaffolding. I think it'll be this way for probably the next 2 or 3 years until they finish construction. Can we get a quick time check in the chat? I just want to make sure I'm going to make the train. Yeah, here's another example. The guys, they don't stop, man. These drivers are crazy. New Yorkers and Florida drivers are crazy. I mean, the way I sort of think of it, and this is the last thing I'll say on the traffic stuff. Like, is it really going to make a difference if you get to your destination like 5 minutes before or 5 minutes after? I mean, we live in New York City. The traffic is egregious. So I think the best thing to do is just slow down. It's going to be all right. I think everybody is on, a lot of people seem to be on edge in the city. But a 5 minute difference isn't going to make or break you. One of the things you'll see are these cars will speed up and then you'll see them sitting at the next red light. Yeah, I know. Zozo Bob says we forget to time check, Tom. Where is the Metro mover? True. 10 p.m. All right, we're on time. We're good. Yeah, Western Mass Dave says the last 2 years taught me to be patient. Austin city limits is, you're right, Tom. Yeah, Clarence Jackson says people rush to the nearest red light. Yeah, it's like, dude, just chill. It's going to be fine. I think it may be a lot of people seem to be very high strung too. Like, it's like, all right, just relax. Jerry, that's a very good point. So Jerry says if the boss wants you to risk your life to be on time for work, looks like it's time to get a new boss. Very, very good point. All right, so back on track. Last thing I wanted to talk about tonight, everybody. So we covered in depth the Micron technology opening up to $100 billion investment into a chip fabricating plant in upstate New York in Clay. We talked about single family home builders potentially, now that they've seen a lot of the demand for buyers dry up, a lot of their excess inventory, they're probably going to sell at a steep discount, maybe 15 to 20% in big bulk block orders to institutional investors or to Wall Street, in which case they'll use those single family homes as investment properties to rent them out. Now, many people would say that it's very cumbersome and monotonous to manage single family homes, but I mean, think about it. If you're buying an entire cul-de-sac or an entire development from one of these big home builders, well, it's going to be pretty easy to manage because you essentially own the whole cul-de-sac. Now, the last thing I wanted to talk about is we are starting to see this trend accelerate as it relates to hiring freezes. So Amazon is the latest company to announce their hiring freeze. But if we sort of dig deeper into the report, Amazon announced their hiring freeze in its retail unit only. This does not extend to their very highly profitable AWS platform, or Amazon AWS, which we talk about all the time. So the reason why I wanted to bring this up is because as we move deeper and deeper into a recession, and as more companies announce hiring freezes or even layoffs, I think it's important to refresh our memory that you want to look to, if you haven't started a career yet, or maybe you're looking for a career change, you want to look for the biggest growing industry and the biggest growing, I would say, recession-proof type of jobs, and maybe look to break in or branch into that specific vertical at those specific companies. So, clear example here is the headline said that Amazon was going to move forward with their hiring freeze for retail workers, but they're actually still in a pretty big hiring boom as it relates to their very lucrative cloud business. So if you think about Amazon AWS, if you think about Microsoft Azure Cloud, Google's Google Cloud Unit, well, maybe you want to get a job as a data scientist or an engineer, or on the sales side, maybe you want to be an account executive, enterprise account executive, strategic SLED account executive at these specific companies, because I think those particular areas are going to be the most recession-proof. Cloud computing, healthcare, cybersecurity. Yeah, Farhan says Amazon hiring in Seattle is now slowing down as well. So what are you noticing? What specific departments did they say? Because what I'm hearing is the retail business is slowing down, but they are not putting any type of limitations on hiring for their cloud unit. Hey, Sabrina Fair is here. Good evening. What's up, Sabrina? Thank you so much. Marcy says, I'm looking at a career change in the new year. So what are you thinking about, Marcy? What particular vertical industry you think you're thinking about? Marcus here. Brian, good to see you. Tom G says, what recession? It's the COVID blues, a once in history hard bounce. America is about to skate away #1 for the next 500 years. Yeah, I don't think a recession necessarily means the United States isn't going to be #1 for the next 500 years. A recession only means 2 negative quarters of GDP growth. So I think as of last count, I think Amazon employed about 1.5 million people in Q2. That's about 100,000 less people than in Q1. Now, I also think that now that we are going into our seasonality hiring, so usually as we go into the holidays, you'll see places like Target. Man, this is a really nice view of the Empire here. You'll see places like Target, Walmart. What else? Who are the other big box retailers that usually do the seasonal hiring? Yeah, Best Buy. A lot of them are still going to ramp up their seasonal hiring, but it's going to be down about 45% since last year. Hey, Gregory, good to see you. This view is nice. Best Bets TV, says Tom, not to be negative, but I believe that China is ahead of the United States economically currently. Michael says, hey Tom, how's the cool weather tonight? It's not too bad. I think I'm already adjusted to the weather. Obviously coming from Miami, Florida, 86 degrees. I think it's not too bad because tonight it's not raining. If it was raining, different story, but it's actually pretty dry. It was raining a little bit today, but besides that, not too bad. Probably a high of about 53 degrees right now. Not too bad. Andrea Zay, good to see you. Teresa Diaz, so Tom, how did your conference presentations go? It went good. I thought I was well prepared. Went good. Very busy day at work today. I actually didn't think I was going to get a stream in. I was so tired, but it's funny. Usually once I start live streaming, I gain all of my energy back that I lost for the day. So I'm glad I started streaming today. Diana is here, says, hey Tom, welcome. Thank you, Diana. Infinite Inspirations says, hey Tom, cyber engineer here that mentioned to you about layoffs here at Google. Last employee was let go, was lying about his degree. No way, holy crap. That's why they let him go, found out, rather interesting. Oh my God. I wonder how they found that out. So what did he say? He had like a master's degree or something, but he didn't? That's insane, man. Crazy. Hey, Gymless Fitness, as you forgot to mention that Elon Musk also has OpenAI, the boring company to manage. Yeah, you're right. That's another thing. So now he has Twitter, OpenAI, the boring company, Starlink, Tesla. I just don't understand how he does it. It's insane. But we were talking a little bit earlier in the stream, we were talking about the great merger arbitrage play that Carl Icahn made, essentially betting that Elon Musk would not be successful in his litigation against Twitter, and he would have to revert back to the originally agreed upon terms. I think Carl Icahn netted himself about 250, was it million? I think it was 250 million bucks. So $250 million. Not a bad view. Borat says, I'm trying to learn web development, but coding is really hard. You know, there's a lot of good free resources out there. And not for nothing, a lot of these coding boot camps are actually pretty good. Infinite Inspiration says, yeah, supposedly he left his ex-wife on a bad note and she reached out to the corporate. Dude, you gotta be, that's not true. That's insane. Dude. So supposedly he left his ex-wife on a bad note and she reached out to corporate and they did an investigation. Oh my God. I'm speechless to that one, dude. I am like, chat, is that ridiculous? Everybody else in the chat, did you see that comment? Oh my gosh. I'm actually a little bit speechless after that one. That is insane. I'm surprised the company actually took that seriously. Isn't there like certain protections, I guess? I don't know. That's insane. Yeah, there's like karma. Yeah, Lil Yell says that's like a Breaking Bad subplot. Holy crap. Jerry says, I've heard stories from recruiters about job candidates that aced the Zoom review, got the job, and on day of onboarding, a different person arrived. Dude, that's insane. Yeah, so I guess all of this remote work, remote craziness, I mean, that's a little extreme for that. That's insane. Jules says it's bad, Tom. I know. Hey, YouTuber is here. Says the channel is growing so big. Thank you, YouTuber. Well, think about how crazy that is. So you do the entire interview process virtually. You get the job, and then a different person shows up. Now, that's bizarre for a couple reasons, because a lot of the interviews that I've been on, and I've been on a lot of interviews in my life, all of the jobs as like an enterprise account executive and up have all required me to do multiple rounds of interviews on premise. So it's usually 3 Zoom calls. And then after that, you have like a round table at the office where you meet with management, you meet with some of the account executives, you meet with the director, the VP. But hey, I mean, maybe that's just for sales. Maybe engineering is different, but that is just ridiculous. That's insane, man. Michael says, how does Twitter make money? They really don't, but they make it through advertising revenue, mostly. Yeah, blues writers like Tom, I'm actually sitting in for blues writer right now. Yeah, Marcy is like, the women in the chat love it more than the men in the chat right now. Wow, so Brevard County Real Estate says, Tom, the last builder I worked for, I had 5 virtual and 1 final, 1 in person. Yeah, that seems about right. I mean, I don't see how somebody could hire somebody if you don't meet them in person. I mean, that's a little weird. Hey, thank you so much, SoCal Lawrence, for the $2 donation. You are very, very kind. Thank you for your support. I appreciate it very much. You know, maybe if it's like a virtual executive assistant or something like that, then yeah, I would say, you know, maybe you don't have to meet them in person. But if I was going to hire an employee, I would want to meet them in person. So I'll give you guys another shot at the Empire State Building here. Travel Nista says, I work with the lady who stole someone's resume and pretended to be her. She did not know how to do the job. This is insane. This chat right now, you guys are blowing my mind. This is absolutely ridiculous. You know, and I thought I felt bad at times for like fudging things on my resume, but nothing like this. This is ridiculous. You know, I remember I had a panic attack. I'm like, you know what? I'm gonna put that I worked at this job for 1 more month than I actually did, just to make it the 2 full years. And I was like in panic mode. But now I don't feel bad at all. I'm like, my God. Hey, it's LV Eddie. Thank you so much for the $5 donation. You are very kind. Thank you for supporting the channel. This is much love to the pleasant walks and knowledge that you share. Keep being an inspiration, brother. Thank you so much, man. Thank you for the support. And more importantly, thank you for watching. It's an absolute pleasure that you're here. And I appreciate it. Hey, Natalie is here. Says, good evening, Tom and team. What's up, Natalie? Good to see you. So now we are headed northbound on 6th Avenue. This is West 36th Street. We're gonna head up towards Bryant Park. Emilio J says, I assume pretty much everybody is lying now on their resumes. I mean, I haven't done egregious lying. The biggest thing that I've done lying on a resume is just putting that I've worked at a company 1 month longer than I had. And it was mainly because it was like an OCD thing. I hated that it said I worked there for 1 year and 11 months. And my OCD was kicking in. I was like, I'm just gonna make it 2 years. Who cares? Nicholas P says, Tom, human resources are going to want to talk to you tomorrow morning. Yeah, it's true. Yeah, watch me get called into the office. What? You only worked at that company for 1 year and 11 months? You're fired. All right, fine. Kick rocks. Emilio J says, I always tell the truth even when I lie, Tony Montana. All right. that conversation was crazy. Now, I think can we all agree in the chat that that is ridiculously bold to lie about a degree? To say that you have, I have a master's, or I have I mean, that's just ridiculous. I don't know. I'll digress. Crazy. Yeah, Rich is like, you didn't lie, you rounded. True. All right, so as it relates to employment, does anybody remember back to our Miami stream on Monday? What we talked about? Well, Monday, if you remember, was the first business day of Q4, and it was also the first business day of the month, which means we hear from the Institute for Supply Management as they put out their monthly Purchasing Managers Index, or the PMIs. Now, does everybody remember the two specific things that I highlighted from that PMI report? And one of the things has to do with employment cooling. Again, one of the things had to do with employment cooling. So we've been talking about this trend. We've been talking about this trend that a lot of the... Stop. No, I understand. I'm just not interested. I'm sorry about that.
Okay, I understand, bro. Maybe in the future,
No.
you hear about the single guy?
I will. All right, thank you, man. Have a good one. I knew those guys were gonna approach. I was trying to be averting. But one of the things that we talked about was in the PMI report, one of the respondents said that they've been having a very big issue with employee retention. However, they're not going to aggressively pursue a solution for their employee retention problem because they're looking to reduce their headcount by about 15%. Man, here's a tip for all people coming to New York. Stay away from the scaffolding. Nothing good happens walking under scaffolding. Hey, John is here. What's up, John? Long time no see. John, how are you, my friend? Good. Hope you're well, man. I haven't seen you in a while. Hope you're doing good. I'm doing well. Thank you for asking. Mike says, speaking of aggressively pursuing. No, I think they just do some type of like Bible study thing. I get questions from them like probably once or twice a month. Yeah, Monique is like, thanks for the tip. But that's the first step. I think what I'm getting at is that is usually the first step, right? The first step is usually hiring freezes. Then they assess the situation. They look for any of the fat that they can trim out of the business. And that usually comes in the form of people who aren't performing well as it relates to sales. And then also, they'll look at who has very, very, very big comps or compensation packages. So if you're an engineer, you probably have something called like a TC, target comp, or total comp. But if you're a sales guy or girl, you probably have what's called an OTE, which is an on-target earnings. So if you're going for like an account executive position or an enterprise account executive position, it'll usually be about a 60-40 split. So 60% of your compensation is made up of your basic salary, and 40% is like a commission. But engineering is a little bit different. It could come in the terms of, a basic salary, RSUs, stock, things like that. But one of the things we were talking about on the other stream is that there's some engineers at some of these very big FANG companies that are senior engineers that have ridiculously big salaries. So I think that you're going to start to see a lot of these companies review that and say, okay, could we get the same productivity out of maybe a junior guy and only pay him maybe 150 to 200,000 as opposed to this senior SWE that's making a target comp of like 700, 800. So I think that's just something to be cognizant of, because you need to keep the productivity up, especially during times like this. So we are now at Bryant Park. We are standing across the street from Bank of America Tower, right here. And also Salesforce Tower, ticker symbol CRM, located right across the street. Hey, Evo is here. Good to see you, Evo. Thank you for joining. So we're gonna walk up to 48th Street, make a left. But I guess I'll ask the group, I'll open it up to the group. And I think I've asked this before, but I think it's good for a quick refresh. At your particular companies, or maybe your family, friends, husband, wife, whatever you hear on the street, are you noticing hiring freezes sweeping across the board at your job? Or are there rumors of headcount cuts and things like that? Jules, thank you, my friend. Hey, Evo says hello from Brazil. Thank you, Evo. Speaking of that Twitter deal, as we approach 45th Street, that is the building that is home to the quantitative hedge fund D.E. Shaw. Oh, Melissa 2087 says my company is still hiring. Marcus says we eliminated the bottom 10% of performers. Wow. Yeah, I mean, it'll usually go down like that, right? Bottom 10, bottom 20% that's not producing is going to get cut. Jerry says I've noticed a reduction of fake job openings in my email. Yeah, I usually get a lot of those LinkedIn messages for jobs and things like that. Maybe I have noticed that it's cooled down a bit. Wow. Beach Girl says I live in Nashville, Tennessee, and I've seen 4 people fired just this week alone. Mike C says eliminating bottom 10% usually increases production. Yep. Well, I think one of the biggest issues is that during the pandemic, there was a lot of artificial demand, right? Now, maybe I shouldn't say artificial demand. I should say temporary demand. Okay, and this is exactly what happened with companies like Amazon, right? When they started to hire like crazy, we just went through that statistic. Amazon has about, or they employ roughly about 1.5 million people. And that's down about 100,000 people from Q1. So when everybody was locked away during COVID, ordering things online, locked away in your home, well, that produces a lot of not sustainable e-commerce demand. So in order to meet that demand temporarily, you had to hire a huge amount of people. I mean, probably 2 or 3 years of pull forward in hiring. And now that everything's opening back up, COVID's pretty much over, vaccines are out, everybody wants to be outside. Consumers are changing the way they spend. They're not necessarily spending less from the consumer data that we're seeing. They're just essentially shifting what they're spending on. So they're spending on travel. They're spending on vacations, booking flights, more services as opposed to regular goods. Yeah, Mike Cease is 1.5 million people employed. That's incredible. So this building right here, the Marsh McLennan building, is actually home to a quantitative hedge fund, D.E. Shaw. And speaking of Amazon, Jeff Bezos' first job out of college was a hedge fund analyst at D.E. Shaw, working directly for David Shaw. But we were speaking about that merger arbitrage that just went down with Carl Icahn acquiring a pretty sizable stake in Twitter. And now that Elon Musk has to buy Twitter, Twitter stock ripped about 25% in 2 days. Now, not only did Carl Icahn profit from that, but it's alleged that D.E. Shaw also profited from that as well. But we just don't know in what amount. But they're located right behind us, right here on 46th Street, in between 45th and 46th. We have a nice New York City trash can here. Lex S is, how about more local groceries getting rid of more and more people at checkouts now? Yeah, well, I mean, I think that ties into our conversation that we had of a lot of the automation. Now, I want to take another quick poll, because maybe this is just me, but maybe there's a lot of people in the chat that feel the same way. I will not shop at Walgreens anymore because they don't have self-checkout, or Dwayne Reed. I just don't do it. Because, for example, every time, and maybe I'll actually show you guys past it so I can give you a real world example. Every time you go into a Dwayne Reed or a Walgreens, the line is wrapped around the entire store and you wait 40, 50 minutes. And there's one cashier. Now, when I walk into a CVS, the store could be packed to the rafters. The place could be going gangbusters. And I never ever wait more than 10 minutes for checkout. You know why? Because I don't have to deal with any people. Everything is self-checkout. So if I have to go to a drugstore, I only go to CVS, because Walgreens and Dwayne Reed, they don't have self-checkout. And this is just another example of why automation increases productivity, increases efficiency. And I think a lot of that stuff is going to happen with this semiconductor bill that was passed. You know, we just talked about Micron Technologies. They're going to invest in up to $100 billion into building manufacturing facilities or fabricators. But I think over the long term, there'll be a lot of robotics and automation that's doing the majority of the work in those plants, if I had to guess. Abby wants a CVS is better with checkout and customer service. Melissa 2087 says, Tom, I'm not gonna lie, I hate the self-checkout. That's a very interesting piece of data there, Melissa 2087. Rick says, you know. Lex S says, I shopped and scanned for a little bit at my local grocery store. So you can basically scan your products as you put them in your cart. So it seems like we're actually split. NYC Dubs has agreed, loves self-checkout. Wow, Abby says, I hate self-checkout. So, okay, well, what are some of the reasons why we don't like self-checkout? Is there, what could be improved in relation to self-checkout? What is one of the reasons why you guys do not like self-checkout? Because pretty soon we're gonna start to see stores where it's not even self-checkout. You just walk in, you grab what you need, and you walk out. Sort of like those Amazon Go stores. So the AI could actually tell what you picked up off the shelf. And you just simply walk out. Monique says the scale at self-checkout. Oscar says they don't know how to use it. Kevin Ramsey says Walgreens is much larger. Marcus says time to get jobs that provide maintenance to automation robots. Yeah. The RT440 says thank God for self-checkouts. Bottomless Coffee says those who do not like self-checkouts are people who don't know how to properly use them. I don't know about that. Maybe. Tucson says I hate self-checkout because of the bad attitude of my cashier. Okay. All right, well, we have a lot of reasons about it. That's interesting. Interesting. But you know what? I will say this. I think any sort of new technology is going to be quite cumbersome for a lot of people. Now, let me know if you guys agree or disagree. This is where I think that we have a huge gap in automation. And I think as it relates to customer service, there is a huge gap in the efficiency of automation. Now, who here will call up customer service of like an airline and you physically cannot get to a physical person and the automated system does absolutely zero to help you? If anything, the automated system just makes you angry. So I think if we could invest resources into solving or increasing an operational efficiency as it relates to automation, it has to be in the customer service segment. I mean, it is so abysmal. I don't think I've ever really had a good experience with a machine or a robot customer service. Is anybody? Danny Long says it's designed that way. Maybe. But if you guys have enjoyed the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days per week between New York City and Miami, and we'd love to have you here along to the walks. Yeah, Goshi says, Tom, many people just prefer the personal treatment. I agree with that. 305 Travels and More says automated customer service is the worst. Hey, Marketing Videography says, Tom, thanks for the recommendation for 50th Street Halal Guys. My 53rd Street guy is now history. Oh, very nice. Marketing Videography. Thank you so much, man. I'm glad you had a good experience. Yeah, line syncs. Like if you've enjoyed the live stream, press 1. Hey, Melissa 2087 says, Tom, my whole job is customer service in the travel industry, and especially with airlines. It's all automatic, and you have to wait forever just to get to somebody, just going through the prompts. Yeah, so one of the things that... hilarious. One of the things that I really like, so I'll give you an example with American Airlines. Here's what I like what American does. And I'm not sure if any of the other airlines do this. Maybe you guys could chime in and let me know. This is Nürburgring Berman, by the way, across the street. One of the things that the American Airlines does, once you finally hammer the robot to the point where the robot is exhausted dealing with you, the robot will finally say something along the lines of, if you want to talk to a customer service representative, either wait on the line or press 1 and we'll call you back and we'll save your point in line. And that's fantastic. So you actually don't have to wait on hold anymore. If you press 1, they'll actually call you back in the order in which your call was received. So that's one of the reasons why I use American. Yeah, Monique says, nice suit. That guy did have a nice suit on. I always appreciate a nice suit, you're right. Jerry says, self-checkout makes me feel like I worked for my food. Danny Long says, once the sale is made, the rest is your problem, says Danny. Yeah, unfortunately. Yeah, Dusty Cole says, I used to work at a customer service call center in college. It was the worst job. Yeah, well, I mean, you're essentially a punching bag, right? Because even if you solve somebody's problem at first, they still want to vent and get their anger out. Yeah, follow the highways. Like, your call is important to us. Real quick, I just remembered, so as it relates to the Federal Reserve, very important to pay attention to Friday's non-farm payroll numbers. If we start to see cooling in payrolls, that could potentially signal that the Federal Reserve may start to have more confidence for a pivot, potentially. But I still think Fed Chair Jerome Powell is going to be steadfast as it relates to them holding monetary policy rather tight. Hey, Teresa Diaz says, Tom, 21,700 subs. Holy crap. That's just, it's insane. Guys, we could fill like a small football stadium, right? With 27,000 people? That's ridiculous. I appreciate it. I would never, I think we're growing. So I looked at the YouTube analytics, and I think we're growing at about 50 people a day, which is just mind-blowing to me. Now, I remember when we first started doing these live streams, and I remember when we just started to hit growing at 7 people a day. I'm like, oh my gosh, we're growing at 7 people. Every day I do these streams, we connect with 7 more people. I remember that like blowing my mind. And now I think we're up to 50. It's just ridiculous. Well, thank you guys for joining. I love it. The streams are fantastic. So speaking of Billionaires Row, we talked about this a little bit last night, but this is 432 Park Avenue, one of the icons, the staples of the Billionaires Row skyline. And maybe we'll have enough battery left to go all the way up to 57th Street Billionaires Row, where we could look at the Steinway building, we could look at 157 Central Park Tower, and 220 Central Park South. This is where we ended the stream last night. And I wanted to point out, this is the Alliance Bernstein building, okay? But in this building is a very notable hedge fund. And the reason why I bring it up is because oftentimes, you know, we'll talk about the cryptocurrency markets on this channel as it relates to Bitcoin and things like that. Last year we were at the Bitcoin conference, and we will be getting another press pass to this year's. But I'm not sure what floor, but in this building is a hedge fund called Fortress Investments. And Fortress Investments used to be the home of Michael Novogratz after he left Goldman Sachs. He was a former managing director at Goldman Sachs, then went on to work at Fortress Investments, where he was wildly successful, had fantastic returns, and now he actually, excuse me, branched off to start his own thing at Galaxy Digital, which is sort of like an investment firm that is geared towards bringing institutional players exposure to Bitcoin and other cryptocurrencies. Now, Michael Novogratz has found himself in some hot water as of late because he had gross exposure to the Terra Luna scheme. Now, I say scheme because Terra Luna was one of these alternative cryptocurrency projects that unfortunately went bust. And I remember talking about this because about a year ago, I remember the comments of people saying, this new thing, Terra Luna, I could lend it out and I could get a 14% yield. And I simply said this, I'm like, I think investors need to revert back to the old saying, if it seems too good to be true, it probably is. So I know this whole DeFi boom and all this cryptocurrency lending has been really hot in the press as of late. But if you really think that you could sustainably receive a yield of anywhere between 7 to 14% from lending out your cryptocurrency, and you don't think that's some sort of like a Ponzi-like scheme, I think you're probably going to learn faster than not that your dreams will not come to fruition as it relates to the DeFi stuff. So Terra Luna went bust. And now I think the Interpol is actually looking for the founder, allegedly, of Terra Luna, Duquan, I believe was his name. Roxy, good to see you. William, Brooklyn is here. Good to see you, William. This is check-in from Brooklyn. Great content. I have a question. Way too smart to be an average YouTuber. Are you a rich white kid? Michelle McGraw says your channel has grown crazy fast. You're doing an amazing job. Thank you, Michelle. Appreciate it. So this is the 157 building. And here is the Steinway Tower. Now, the interesting thing is that 157 was actually the original Billionaires Row building developed by the Extel Group. And I think one of the most notable sales of 157 was Michael Dell, also billionaire hedge fund manager Bill Ackman. And it's funny that we mentioned Bill Ackman now because there was we talked about this I think 3 times already on the stream. Carl Icahn made an amazing merger arbitrage trade on Twitter, netting his firm about $250 million. But I always think back to those days of the infamous Bill Ackman and Carl Icahn feuds on CNBC as it related to Herbalife. Does anybody remember the Herbalife schemes? Or that whole big Herbalife thing? Where Bill Ackman had a big short thesis on Herbalife, and subsequently Carl Icahn had a huge long position in Herbalife. Now, Bill Ackman has alleged that Herbalife was sort of like an MLM pyramid style scheme, which I actually agree with Bill Ackman on that. But they're heated exchanges. If you guys want to look that up on YouTube, type in Carl Icahn and Bill Ackman, CNBC, if you want to have a laugh. But anyway, as I was saying, 157, the cool thing about this building, it was developed by the Extel Group. And on one side, on the right side, you have the beautiful Park Hyatt Hotel. Now, the Park Hyatt is one of the few 5-star hotels in New York City. It has amazing amenities such as a swimming pool, a beautiful gym overlooking Central Park, and 24/7, 365 room service from a 5-star restaurant. But if you look at this doorway right here, this is actually the doorway to the residences. So you could actually buy individual condominiums here and share all of the amenities of the 5-star hotel. But not to one up 157. If we turn our attention over here, this is the beautiful, magnificent Central Park Tower that towers over every single other building on Billionaires Row. And Central Park Tower is also developed by the Extel Group. And I believe the top floor penthouse right now is selling for a whopping $250 million. And I believe the gentleman tasked with selling that particular penthouse is Ryan Serhant, the founder and CEO of the Serhant Group, which is a wildly successful, innovative real estate brokerage based right here in New York City. I'm sure everybody knows Ryan Serhant from $1 Million Listing New York. Very charismatic, sharp sales guy, great business guy.